Okay, good evening, everyone.
Good evening.
Good evening, May.
So as you all know that we have been appointed as account executive for Automobile Workshop Senjang Berhad. It was such a great honor for us. And there is a statement of account provided by the owner, Mr. BKAN and Mrs. Sheila, and I'm sure that everyone can discover that something is missing. The reason why we have this WebEx meeting today is because I think there is a necessary for us to explain to Mr. BKAN and Mrs. Sheila why an important set of financial statements are very useful in managing a company. Therefore, I would like to hear the opinion from all of you. So firstly, let's see about the financial statement. So Carol, could you please show us?
Yes, Miss. At the glance of the statement of account given by the previous account executive, we can see it is obviously that something is missing. So to prepare a proper set of financial statement, I would like to present three of the financial statement. Firstly, the statement of profit or loss shows that automobile earns 215,000 and total expenses are 100,200. So the fees earned subtract with the total expenses, then it got the net income is 114,800. Next, the statement of changes in equity. Compare it with the additional investment from owner net income, then the capital of automobile for this year is 293,800. Last but not least, the statement of financial position shows that it have a balanced amount between the total assets and the combination of liabilities and owner's equity, which is 324,800. So that's all from me for financial statement. Thank you.
Okay, nice. Okay, now we can see it. Okay, thank you, Carol. So next, could Umi and Ong explain about the importance of financial statements so we are able to give a better picture to Mrs. BKAN and Mrs. Sheila. So Umi or Ong?
I shall speak on 2 points, which is the importance of financial statement to the management and shareholders. Okay, the first one, the importance of financial statement for company. A company's financial statement provides vital information about its financial health. This statement are compiled based on day-to-day bookkeeping that track funds flowing in and out of the business. The information that statement provides offers benchmark and feedback that helps the company make minor adjustment and also determine its direction. Financial statements are useful for making decisions regarding the expansion and financing. Next, for the shareholders, this statement enables the shareholders to understand how the company has been performing. It also enables them to judge the present and future performance. A profit and loss statement details how much profit or loss that the business has made during a designated period. And the most important pieces of information that provides the profit and loss statement are whether the business is making a profit or how much it's earning or losing. That one is my point.
Okay, now I would like to present about the importance of financial statement to creditors, employees, and governments. I will share the content. Can you see the content?
Yes.
Okay. Financial statements is recorded the company's liquidity and profitability. They will concern to the company's financial statement position and decide whether lend their loan to company in the future. The financial statements serve as a useful guide for probable leaders of a company. It is through a critical examinations of the financial statements that these groups can come to know about the liquidity, profitability, and long-term solvency position of a company. This would help them to make a decisions about their future course of action. Okay, next is the employees. Employees need to know the information from company to know their current wage and future salaries appraisals. They are entitled to bonus depending upon the size of profit as disclosed by audited profit and loss account. Thus, profit and loss accounts becomes greatly important to the employees. Next is government. Government will use the financial statements due to taxation's purpose. Government needs to analyze the business performance in various sectors to assess the economy's performance. This due to the economic condition of a nation is identified by collecting such financial statements from various sectors. Okay, that is my points. Thank you.
Okay, thank you, Umi and Ong. Next, we had discovered that the account have not been adjusted as at 31st December 2019. As you all know that the adjusting entries is necessary before an accurate set of financial statements could be prepared. Therefore, Afifa and I will explain about the advantage of adjusting entry. So Afifa, you may start.
Okay, so I will not use slide, but I will explain it just like this. So the first important thing that we need to know at first is the meaning of adjusting entries. So basically, adjusting entries are made on the last day of an accounting period to ensure that accounts are in line with the accrual method of accounting and the matching principle. So basically, there are 5 adjusting entries such as prepaid expenses, unearned revenue, accrued revenues, accrued expenses, and depreciation. So the first adjusting entry, which is prepaid expenses, are basically future expenses that have been paid in advance. In other words, prepaid expenses are costs that have been paid but are not yet used up or have not yet expired. Next, the second adjusting entry, which is unearned revenue, is basically money received by an individual or company for a service or product that has yet to be provided or delivered. Moreover, the third adjusting entry, which is accrued revenues, is basically a sale that has been recognized by the seller but has not yet been billed to the customer. Furthermore, the fourth adjusting entry, which is accrued expenses, is basically an expense that is recognized on the books before it has been paid, since accrued expenses represent a company's obligation to make future cash payments, and they are shown on a company balance sheet as current liabilities. The example of accrued expenses is interest payments on loans, warranties, on products or service received, and taxes. Finally, depreciation represents how much of an asset's value have been used up. So the benefits of adjusting entries will be explained in detail by Khairul.
Okay, thank you, Afifa. So beside that, adjusting entries ensure that income statements only reports revenues, losses, expenses that is earned or incurred during accounting periods. It helps the company to calculate exact revenue and expenses, updated financial statement to fix error and to calculate the exact expense. So I think that's all for today meeting. Is there anything else anyone need to say or ask before we wrap up this meeting? So if not, then hope to see you all again soon.
Okay, thank you, Miss.
Thank you, everyone.